Hello, this is Chart Profit Webcast. Friday 29th of May, we're about coming up to 3 hours into the trading day. Just a quick review of the E-mini S&P. Looking at daily profiles here over the last month. If you remember on the 13th in here, the 10-month point of control migrated up to that level, which is 20.95.50. All the price action so far has been above that level, which is encouraging, and it's all been buying. So significant buying in green. Unfortunately, the attempts to auction the E-mini higher and extend the breakout have not really been successful. So although we've seen aggressive buying here and here and here, we really haven't seen an effective performance from the buyers so far in terms of auctioning the price significantly higher. So market still continues to frustrate a little at the moment. The time support just here on Tuesday gave us really reliable support at that point, which was again encouraging, but at the end of this week we've faded a bit. So this is from today's pre-open. Here's the big support down here, 20.95.50, which is the 10-month time support, and then we've got this band here which is 21.15, that's the half range off the May high, and 21.17.50, which is the minor point of control. So price relative to this minor price band would provide a clue re short-term strength and weakness. So let's have a look at the performance post open on this 5-minute chart. So you opened in here. This line here is 21.17.15. This is just a little probe above it, and then immediately, as we saw actually the other day, a couple of days ago, we've auctioned swiftly lower. Currently we're coming back a little bit here, but again another frustrating thing is that this green at top high, this aggressive buying high here on Wednesday, 80% of the time these are exceeded within 2 days, and obviously so far, at least today, we haven't seen that. Bulls would also want to see these numbers here, the percentage stocks greater than their 50-day moving average. In New York we've got 46%, Nasdaq 49%, Russell 2000 44%. We want to see those above 50. These numbers are not really supportive. Numbers above 50 are supportive. So on the daily breadth chart, New York, that's the number there, and the indicator just above that, the net new high is 25. 5-day moving average in yellow, as you can see, is below the zero. So the breadth could definitely do, these two indicators could definitely do with improving. Similar look to the Nasdaq currently, as you can see. Those two indicators are currently giving us this red indication here on the breadth. Definitely want to see price momentum holding above zero. It's currently higher, which is okay. We want to see breadth improve, and obviously on the S&P, on the spider, this level here holding. Here's the live chart. This is Metastock Professional I'm using here. Daily chart. This is the spider. 207.92 is that big time support down here. Currently we're well above that. Just zoomed out a little there. Just wanted to make the point, late last year over here we saw sentiment indicators peaking at this point, and you can see the struggle that the market has had ever since. This is where the RIDEX hit its extreme, our RIDEX ratio, and there's been quite an oscillating kind of ride since then for the chart. Obviously it's up around its highs, but really kind of muted performance, especially in a 5-year, 2015. As we know, April, May in a 5-year, really strong performers, one of the best, most bullish parts of the decade cycle. And it's just been a little subdued. Russell 2000 ETF, IWM, currently just managing to hold a strong price location above its halfway point off the April high and above the 3-month point of control at 122.35. So we're currently in here. That's encouraging. This is worth noting on the diamonds chart on the Dow Jones ETF. The 12-month point of control has migrated higher to 180 dead, and we're currently probing that what is currently support. Price below here would be weaker and a negative indication. These stock index ETFs currently, I see them as just maintaining their sort of strong price location. Let's hope for that to continue, and hopefully breadth will pick up as well. This is the UK FTSE 100 index, closed about 1 hour ago. We had a probe early in the month here into that time support at 68.34, and currently we're consolidating above that level, which is again encouraging. European markets, we're looking here at the German DAX, not so strong. The 9-month point of control is up here, 11,790, which corresponds to the halfway point, almost exactly off the April high. And we've had a weekend to the week, and we're below this double resistance. And this is weak price location. Obviously, there's some nerves currently over the Greece situation, and we could see some weakness, or at least volatility, over the next few days. Price back above 1170.90 would be a much stronger situation for this chart. This chart looks a lot stronger. This is the Nikkei hitting, I believe, 15-year highs up here at the end of this week. This is the, let's have a quick look at the sentiment indicators. This is my version of the Ridex assets ratio, and as I mentioned late last year, over here, the Ridex ratio hit its high at this point, indicating extremely bullish retail traders at that point. Basically the market went nowhere, went into this consolidation for a couple of months, managed to push higher, and we then just exceeded that previous record here, up around 14 something on the Ridex ratio in February. At this point, just slightly higher than here, and from there, as you can see, the market has just gone into another consolidation. As I mentioned, we're up around the highs here, but very kind of muted market for a 5-year. You can see the Ridex ratio is quite a bit lower from that point, but the market's still struggling to break out. So we have this kind of triangular pattern, I believe, an ascending triangle. We want to see a breakout here on solid volume. You can see here the Ridex bull fund assets that I follow quite a bit lower than they were back here in November when they peaked. And here's the bear fund assets off their extreme lows, which we hit late April again here, but not by much. There's a really extreme low in the number of bears. It may take another dip in the market to see this kind of increase in bear assets, which would be probably useful. Public poll from AAII this week, the bulls percentage was higher at 27. Putting that in perspective, that was up from previous week's 25.2, which was a 2-year low in bulls percentage. Bears percent was almost unchanged. But the 4-week moving average of net, that's bulls minus the bears, down around 0 currently. So you can again, late last year, we hit the peak here, up around here in the market. But obviously we've seen a useful increase in bearish sentiment here as the market's just sort of drifted slightly higher, and that may be good news in the sense that we're getting or providing some fuel for the market here. Investors Intelligence saw the bulls percentage lower this week at 48.5. Again, 2 weeks ago, bulls percentage came in at 47.5. That was a 6-month low. This level here is this year's low in the 4-week moving average of net. I watch this yellow line. When a previous swing low in that indicator gets broken, it often marks a level in bearish sentiment, which will often see a rally ensue, as it did here and here. Exposure index, the current equity exposure of active money managers, lower this week, 65.5. 2 weeks ago, the index reached a 6-month low here at 60.38. So most of these sentiment indicators well off their peaks, and the 4-week flow here in yellow in the Lipper US fund flows. Data is still in negative territory. There was a small inflow this week, 221 million, relatively small net inflow to the 27th of May. Okay, we look at the supporting charts. This is TLT, the T-bond ETF. If you remember back in April, we saw the 6-month point of control migrate to 129.80. I mentioned at the time, if that occurred and price were to dip below that level, that would probably bring immediate weakness, which it did. And we've actually seen price decline right down to the existing support levels, time support down here at the 12-month point of control, 119.26, and we're seeing a bounce from there. There's further more important support, should we see it, at 117.14, the major. If this is a new bear market for bonds and we see price below here, as I mentioned before, that would most likely mark extreme weakness and the continuation of the next leg down. But currently we're holding the obvious support, and that's kind of encouraging. And if we look at IEF, which is the 7 to 10, Pretty similar looking situation. We've got support here which has been probed, the 16-month time support at 105.85 and the major a bit lower at 105, and again we probed it and we're bouncing a little here. Continue to be bearish for precious metals. This is gold ETF, GLD, pretty weak looking chart. The half range here, as we know, was probed recently. That's the half range of this low to this high. Saw rejection there and then price back below the 5 month, sorry, beg your pardon, the 18 month at 115.12. Time support, so we're now in a weak price location here. I can see the previous lows being tested on this chart. As we now have proven obvious resistance at this level here, price back above like that would negate that weakness, but I do still see this chart as pretty weak. Similar situation for silver. Actually, the 18-month point of control migrated to this level here, which is 1636, and we are below it here, so weak price location for this chart as well. And again, you could easily see test of these recent lows. Oil, USO, the oil fund ETF, as I mentioned before previously, 16-month point of control was much higher. It fell to 1839, and we've been consolidating above that level since early April. So this is actually a stronger looking chart than the precious metals. When the dollar index did this and dipped below its 12-month point of control earlier in the month, moved into a weaker price location, and there was a lot of expectation in the media for a much larger correction for the chart, but it quickly reversed as soon as it got back above 94.67 in here. That put it back in a stronger price location, and surprisingly for many, dollar is rallying once again, and even in the short term we're now back above the halfway point, which you always mark from a correction to an uptrend, and we're now sitting back above there. So that would be a bullish looking pattern, so we need to hold this and turn back up. Probably see the high here exceeded should that happen. Price below that level, it's roughly 97, so price here would be short-term weakness, and price below 94.67 would be longer-term indicator of weakness. So let's look at some other charts to get clues. This is the Aussie dollar. The major, very much a long-term level, major point of control at spot 76. Support here and here and here, as we've talked about before. This level up here, spot 79.25. We talked about it last week. This is a major half range level, and we just printed a couple of days below that level, so that's short-term weakness, and we're back down to this major support. So price below here would indicate a continuation of weakness on the longer time frame, strength for the US dollar. Nothing new in any of these levels, just reviewing the chart relative to major support resistance. Here on the pound dollar, we talked about the major half range last week. We've just failed a little below that, and then back underneath the 12-month point of control. So this again a weak chart. Next level to monitor is the minor half range off the April low, which comes in here around 152. Price under here would indicate a test of the previous low. Euro FX as well, the 12-month point of control again, no change. We monitored these last week as well. 12-month point of control at 113.40. Just probed into it here. This dotted blue line here is a major half range level, many years. And back underneath that in a really weak price location for the euro. And again, the next level to monitor is off the March low to the subsequent high, and the halfway point comes in here just below 110. Nothing like strength in this chart yet though. If we see a probe back up into a time resistance as it did here and then a quick rejection, to me that doesn't indicate any level of strength in the chart. Finally, the dollar yen 12-month point of control, as we pointed out last week, migrated slightly higher to 119.64, and then we were advancing from there, and that's a strong chart, and we're higher this week. Actually hitting multi-year highs this week. Okay, that concludes. Let's hope for improvement in June. Something a little more interesting. You can see from the chart here, really this chart. This is the spider. It's gone nowhere for 3 months. Okay, so once again, I wish you a good weekend and thank you for watching.